All right, tech titans, buckle up. You're watching Qualcomm Pulse, and we've got a rapid-fire download of the biggest stories hitting the semiconductor and AI landscape. First up, we're diving deep into Broadcom and their pivotal role in the AI race, exploring how their ASIC exposure could be a game-changer. This isn't just about chips, it's about who's building the future of artificial intelligence. Next, we're looking at the crystal ball with a prediction that could see Broadcom soaring even higher. What's the key factor that could unlock further gains for this tech giant? We've got the insights you need to know if this is the right time to get in on the action. Then, we're pulling back the curtain on significant stock moves. We'll unveil the latest insider trades from major players like Tesla, Broadcom, and Salesforce. Who's buying, who's selling, and what does it mean for their future? Get ready for the unfiltered truth on these market-shaking transactions. And finally, we're dissecting the fundamentals that make a company a long-term winner, using Broadcom as a prime example. We'll explore revenue growth, profit margins, and insider confidence. It's all here on Qualcomm Pulse. Don't forget to like, subscribe, and hit that notification bell. Broadcom's strategic gamble. Is ASIC the key to AI dominance? In the relentless pursuit of artificial intelligence superiority, Broadcom Inc. is emerging as a formidable force, not just alongside the dominant GPUs, but by carving out its own critical niche with solution-specific chipsets. This positions them as a key player in the ongoing AI revolution. The company's strategic exploration into application-specific integrated circuits, or ASICs, presents another compelling possibility in the high-stakes AI race. These custom-designed chips are tailored for specific tasks, offering unparalleled efficiency and performance, making them increasingly vital for the massive computational demands of AI. Broadcom's existing strength in analog products, which are already in high demand, further solidifies their foundational capabilities. By potentially leveraging their expertise in both analog and digital realms, they are well-positioned to offer comprehensive solutions that address the multifaceted needs of AI development and deployment. This dual focus allows Broadcom to cater to a broader spectrum of the AI hardware market, from foundational components to highly specialized processing units. Market observers are keenly watching Broadcom's moves, recognizing that their strategic diversification into ASICs could significantly alter the competitive landscape. The ability to offer tailored silicon solutions alongside their established presence in the broader semiconductor market provides a unique advantage. The question on everyone's mind is whether this strategic bet on ASICs will pay off, cementing Broadcom's position as an indispensable partner in the future of artificial intelligence. Will Broadcom's ASIC bet pay off in the AI arms race? Stay tuned as we explore the predictions for Broadcom's stock surge next. Broadcom's soaring stock. Can AI momentum sustain the rally? Broadcom has been on an absolute tear, with its stock price surging an incredible 95% in the past year alone. This phenomenal growth is largely attributed to the explosive momentum in artificial intelligence, a landmark $100 billion partnership with Apple, and the company's impressive $1.6 trillion market capitalization. It's clear that Broadcom is a major player in the current tech landscape, driven by innovation and strategic alliances. However, beneath the surface of this remarkable success lies a potential vulnerability: Broadcom's significant reliance on just a few key clients. This concentration of business, while currently fueling growth, also presents inherent risks that could impact its future trajectory. The question investors are grappling with is whether the current trajectory is sustainable or if diversification is needed to mitigate these risks. The market is buzzing with discussions about Broadcom's future. While the AI boom and major partnerships provide a strong tailwind, the dependency on a limited client base raises concerns for long-term stability. Analysts are weighing the potential for further gains against the inherent risks, making it a critical juncture for both the company and its investors. Can Broadcom continue its ascent, or are there hidden challenges ahead? Get ready, because we're about to uncover the latest insider trading activity impacting Tesla, Salesforce, and more. Insider moves, unpacking trades in Tesla, Broadcom, and Salesforce. In the dynamic world of stock markets, Insider trading activity often provides a crucial lens through which to understand a company's internal confidence and future prospects. We're diving into the latest significant transactions involving 5 prominent companies: Tesla, Broadcom, Salesforce, MARA, and the Trade Desk. Starting with Tesla, a substantial divestment occurred as SVP, APAC, and Xiaodong Zhu offloaded 20,000 shares, totaling a staggering $7,275,000. This move comes as Tesla continues to be a central figure in the electric vehicle market, and the sale may signal a strategic portfolio adjustment or profit-taking in response to the EV giant's fluctuating stock performance. Broadcom presents a more complex picture with a flurry of activity. CEO and CFO Harry L. Yu made a confident move, purchasing 3,550 shares valued at $1,227,843, indicating strong belief in the company's trajectory. However, this was contrasted by a massive divestment from director Hock Tan, who sold a staggering 148,154 shares, worth $49,879,007. These opposing actions paint a nuanced view of internal sentiment towards Broadcom's market position. Salesforce received a positive endorsement from director David Blair Kirk, who acquired 3,400 shares for $865,810, underscoring optimism about the cloud computing leader's growth potential. Meanwhile, MARA Holdings saw director Vicky Mueller-Berk sell 14,887 shares for $226,580, a transaction that could represent a routine portfolio rebalancing. Lastly, director Andrea Lee Cunningham of the Trade Desk sold 1,403 shares for $67,624, potentially capitalizing on current market valuations. The market is analyzing these insider moves closely, seeking clues about future performance and strategic direction. The contrasting trades within Broadcom, in particular, have sparked considerable debate among investors and analysts. What do these insider transactions truly signal for the companies involved? Prepare yourself as we shift gears to analyze the fundamental strengths driving long-term value, focusing on Broadcom's impressive financial health. Broadcom's profit powerhouse: why consistent earnings matter. For many investors, particularly those new to the market, the allure of a compelling company story can overshadow the fundamental need for profitability. However, the reality is that companies consistently operating at a loss often see their investors share in those losses over time. A company that has yet to prove its ability to generate profit faces the risk of its external capital sources eventually drying up. If your investment style favors companies that not only generate revenue, but also consistently earn profits, then Broadcom, NASDAQ, AVGO presents a compelling case. Even if the market currently prices Broadcom fairly, its demonstrated ability to generate consistent profits provides a solid foundation for adding long-term value to shareholders. This focus on sustainable profitability is a key differentiator in today's market. Broadcom's financial performance offers a strong narrative of sustained growth and profitability. The company has achieved an impressive compound annual growth rate of 18% in its earnings per share (EPS) over the last 3 years. This consistent earnings growth helps explain why the stock commands a high multiple of its trailing 12-month earnings. Furthermore, a closer look at operational efficiency reveals that Broadcom's earnings before interest and taxation (EBIT) margins have expanded from 31% to 40%, coupled with robust revenue growth, signaling strong underlying business health and increasing profitability. Investors are taking note of Broadcom's financial discipline and growth trajectory. The company's significant insider ownership, with insiders holding a stake worth approximately $20 billion, signals strong alignment between leadership and shareholders. Moreover, CEO compensation remains well below the median for comparable companies, suggesting a modest remuneration culture that prioritizes shareholder interests and good governance. Can Broadcom's track record of profitability and strong governance continue to drive shareholder value? That's all the news for today on Qualcomm Pulse. Don't forget to like, subscribe, and hit that notification bell. And that's a wrap on today's Qualcomm Pulse. We covered Broadcom's AI race strategy, predictions of further stock surges, key insider trades from Tesla and Salesforce, and a deep dive into Broadcom's impressive financial fundamentals. If you found this update valuable, smash that like button, subscribe for more cutting-edge tech news, and ring that notification bell so you never miss an episode. Follow us on all social platforms to join the conversation. Thanks for watching.